Good afternoon, everybody. It's a great pleasure to have you all join us. Today, we're hosting a session on the Saudi Arabian startup ecosystem. This is now the third webinar that we've launched. We're going to be launching a new webinar series as part of MAGNiTT, where we hope to engage with all of you. And I have the absolute pleasure today of being able to host His Excellency Dr. Nabeel Koshak, the CEO of Saudi venture capital company. And the idea of today's session is to deep dive into a report that we recently published on the state of entrepreneurship and venture investments in KSA, which we did in collaboration with Saudi venture capital company. The format of today's webinar is a quick 5-minute presentation by myself to set the scene of the startup ecosystem and venture investments in KSA, followed by 15-20 minute conversation between myself and Dr. Nabeel Koshak. And I open it up to all of you if you have any questions that you would like to ask either of us or specifically to Dr. Nabeel on the state of entrepreneurship in Saudi Arabia. That would be great. And as I always say, there's an opportunity for you to pose questions in the chat. We've launched a poll, which for us is extremely insightful to get your feedback on the current state of affairs. And we welcome you to follow us on YouTube, where this will be hosted afterwards. And we'll be sharing this along with the presentation after the call on MAGNiTT and our social channels. So to set the scene of where we're at, basically it's been fascinating. I've been traveling to Saudi for 10 years in my previous roles at Oliver Wyman, as well as Barclays, and recently through MAGNiTT. And it's amazing to really see the activity that's taking place in the kingdom. The format of the presentation is to really look at what are the 5 key takeaways that we've seen from the 2019 Saudi venture capital snapshot, look at where the investors are coming from, how this is impacting the kingdom in terms of the wider region, quick overview of the industries, and then to close out on what were some of the top investment rounds for KSA. So to put things into context, we've really seen a big acceleration in the last 2 years. I'll be asking Dr. Nabeel what are the drivers for this, but effectively since 2017, we've really seen a concerted effort across the whole of the kingdom for policies and regulation to try and drive entrepreneurship in KSA. And the results of that have really come to show in the last 2 years, and we expect this trend to continue. You've seen more investments take place than any previous year, and where you see the bottom, the disclosed green amount of funding and the gray undisclosed funding, you've seen more funding of Saudi-based startups. So everything that you're seeing on this page is based on startups headquartered in Saudi Arabia. And when you start looking at who are these investors, there is a very concerted effort by the likes of SVC, as well as Sagia and Munsh'at, to try and encourage not only Saudi-based investors, but also international investors to come and participate and invest in Saudi Arabia. In fact, Sagia announced that they've had more investment licenses released to investors from outside of the kingdom than ever before. But when you look at the number of investors, there were 41 different funding institutions that invested in Saudi-based startups, up 15 from last year, 51% of which had never invested in Saudi-based companies. And that's showing this increased appetite from investors in Saudi-based companies. And 5% of which come from international. That's not regional. Regional is from the region. International is from outside of the region. So that makes sense. It's still growing. We're not seeing a huge, I think it's 27% were from international investors in MENA-based companies. So 5% is still low, but as startups continue to grow, we expect that trend to continue to grow. And when you start looking at who these investors are, you're seeing more active investors, new accelerator programs, as well as more traditional investors in Saudi Arabia investing in Saudi-based companies. And this is extremely healthy. In fact, when you start looking at the most active investors, many of the names on the left you'll recognize, not only are they the most active, there is a significant step change between the number of investments that they were making in 2018 and the number of investments that they were making in 2019, which is extremely encouraging. When we start looking at how Saudi compares to the rest of the region? Well, given that it's only been having concerted efforts in the space in the last 2 years, it now ranks third, both by number of deals and by the total amount of investment across the whole of the region. Now, that's extremely encouraging. I believe it was the fastest growing of many of the geographies, especially excluding Tunisia in the region. And it'll be interesting to see Dr. Nabeel's views on how this will progress into 2020 and moving forwards. But we expect that this will continue to drive, especially with the initiatives that you've just seen with Biban conference and the view of trying to drive entrepreneurship in the kingdom. In terms of the amounts, you would need to see larger investment rounds and more investment rounds take place. And we expect that Saudi Arabia will surpass Egypt next year. The Egyptian number was somewhat skewed by the swivel investment of around $45 million, and that you'll start seeing large companies being set up, especially with the funds that we've heard being created. In terms of industries, though, this is very much similar to where the rest of the region was a couple of years ago. As I've mentioned in my previous webinar, e-commerce and logistics, the large infrastructure plays, are usually the first industries to be disrupted, and that seems to be the case in Saudi Arabia to date. However, I expect this trend to kind of change and develop into other industries such as education, data analytics, and fintech, where there's a specific concerted effort with SAMA and Fintech Saudi to try and drive innovation in financial services. And to end with, it's just interesting to see these top deals. Last year, there were 5 that were the biggest disclosed funding rounds, amounting to around $28 million. And there is, every time I go there, this view of when are we going to see the next unicorn? Well, to see a unicorn, you need investment rounds that are at least 20x the size of the top investment rounds that we've seen to date. So I think aspirationally, we want to move towards startups receiving 20, 30, $40 million of investment next year as they grow towards the path of becoming a unicorn in the region. So that I just started with to give a little bit of context. I would like to now move to our guest today, Dr. Nabeel Koshak, who is the CEO and board member of Saudi Venture Capital Company. He was also the founding member of the angel group Athal and was one of the executives of the Prince Mohammed bin Salman's College of Entrepreneurship, advisory board member at MAGNiTT, as well as many different advisory and chairman roles, including Wadi Makkah, which really, he is a pioneer in the space of entrepreneurship in Saudi Arabia, and we're very pleased to have him today. So I will ask him to now please join. Allow me to stop the share and introduce Dr. Nabeel to join the call. If you can please accept the video. There we are. Thank you very much for joining us today.
Thank you.
So what I would love to do is just ask a couple of questions. So, I mean, clearly with Vision 2030, there's been an outline of focus on SMEs and innovation. Why, from your perspective, is entrepreneurship such a priority for stakeholders in Saudi Arabia at the moment?
So I think this is a global trend where actually I've been picking up in many countries across the globe where innovation-driven startups has a potential of high and fast growth, and they become like economic engines that will help the economy to excel, especially in Saudi, as we are trying to diversify the economy. This is one of the instruments being utilized in many countries to diversify the economy and go beyond oil, as well as to untap and unleash the potential of evolving sectors in Saudi Arabia, including now tourism, including culture and art and other untapped potential sectors that will diversify the economy in Saudi Arabia.
And so we've seen a lot of activity clearly in the last couple of years. What do you believe have been the key drivers to this growth in the Saudi ecosystem, both in number of deals and the amount of investment in deals?
So there are actually many factors that has been affecting this. I would like aggressive change in that direction. One of them is actually, I think, the accelerated update in terms of the regulatory environment. So we have been seeing regulations like on now monthly basis as being update to really facilitate this exercise. And one of the key issues is also ease of doing business, the ease actually of getting visa, so we can invite talents to join these startups. Though many other required actually changes needs to be also updated. There is many updates to come, but luckily actually we have in a faster pace in doing that exercise than the aggressive updates on regulations. This is one aspect. The other thing is actually now there is more of a consolidated efforts than fragmented efforts between SAGIA, Musha'ad, the SME authority, as well as the MCI, the Minister of Communication and Information, and other key players in the ecosystem in terms of ministries, as well as the local authorities that will really facilitate the fast growth in terms of the deal flow creation, as well as the acceleration of the funding and investment. Definitely there in terms of risk capital, and the availability of risk capital is a key issue in the entrepreneurship ecosystem. Specifically the JADA Fund of Funds program by PIF, as well as the SVC program, the Saudi Venture Capital Program, which is a direct co-investment program alongside angel investors that really stimulate the market at the early seed stage, as well as the Fund of Fund program that will actually provide the availability of different VCs that will focus on different stages as well as on different sectors. So it's all actually, I think, about to streamline the funding gaps from ideation to exit. We are now seeing, yeah, sure.
No, and sometimes, I mean, I was there 2 weeks ago and we had plenty of conversations with different people. And one of the things is to identify, if you want to see a growth in the ecosystem, it's important to identify what the challenges are. So what is the challenge just that you currently face to really see an acceleration of growth of investments in this space that need to be addressed to try and help develop the underlying ecosystem?
Sure. I think one of the challenges now, we need to balance between the availability of risk capital across the different stages of investments, and also the availability of the deal flow creation. So since the deal flow creation exercise, and we are actually fortunate that we have a couple of investor-backed accelerators evolving, specifically the MESC 500 exercise, that really backed by investors, that is like skin in the game, and created actually a couple of quality deals. And now this is their third batch now in Saudi Arabia. We saw also the seed stars with the Vision Ventures, and that actually will help also to balance between the availability of investable quality deals as well as the availability of risk capital. So this is one of the challenges in really balancing the pipeline between the creation of quality deals, investable quality deals, as well as the availability of risk capital across the different stages.
What about the mindset of the entrepreneur? I mean, it's not just a Saudi problem or issue, but here in the region, some people need to be aspirational and kind of think not only in their own country, but regional, if not global. I mean, how do we try and drive the behavior to think of something wider than just one specific country?
Sure. I think that's part of the availability of this different funds, as also the involvement of professional angels and angel groups. It's actually part of the challenges that we are facing here, as actually also the education part, educating the founders of what is a venture deal, and scalability is key to that venture deal. And this is what venture investors are looking for. So your growth and expansion regionally and globally is a key factor to have a venture deal that is appealing for investors to invest in. Definitely, we will see some overvaluation and some behaviors that are not actually in the right direction. But now I'm seeing the entrepreneurs, the more they're getting educated in terms that if you're doing an overvaluation, you will be stuck on the future funding rounds, not to engage more investors to scale and grow. So with this growth mindset, I think it's very important to educate more of the founders as well as the professional investors. And that's the only way to have a potential scalable startup with the right pace of acceleration and growth.
And so I always ask the question, is it beneficial or counterproductive to try and encourage foreign startups to come and set up in Saudi Arabia? I mean, there is somewhat of a protectionist view that, well, they'll come and compete, but at the same time, there is a lot of learning lessons that you can have from international founders that have been successful. There's employment opportunities, there's opportunities for inspiration. What's your view on encouraging international startups to begin to scale into Saudi Arabia as it begins to open up?
Sure. I think the nature of venture investment is cross countries, and this cross country thinking of the founders, the entrepreneurs. So this is the nature of this industry and how venture deals evolve, where actually it's cross countries in terms of founders as well as the investors as well as the markets that they are scaling into. So I think this is not becoming a question. It's a matter of implementing that and how we ease that spin out homegrown startups coming out of Saudi Arabia going regionally and globally, as well as you invite startups to join the scene. And that will create also a healthy competition and healthy co-opetition and collaboration sometimes. And you might see like mergers and acquisitions and joining forces, and sometimes there's a healthy competition to enrich the entrepreneurship ecosystem at large, as well as the investors. So we also want to invite more foreign venture investors to join the scene, because also they will add value through their regional or global portfolio companies, where portfolio companies of a fund that will exchange experiences and knowledge, and sometimes they will help each other to expand in terms of growth across countries.
And so, I mean, you have a very close relationship, I guess, with different government entities, whether that be SAGIA, Marshat, or Jeddah, who are all trying to spur on entrepreneurship. And this is a question that I pose across the whole of the region. What is the role of government to spur on entrepreneurship, and where does it lie for the private sector to kind of tackle some of the challenges, and where best can government entities try and support entrepreneurs and the ecosystem at large? What's the balancing act there?
Sure. I think there are many roles, but I think one of the main roles is actually to really debug the regulations to make sure that is venture appealing for the founders and the entrepreneurs, as well as the funders or the venture investors. So the more you have a regulatory environment that is really supporting both sides, we will see more transactions happening in different stages to support that growth of number of deals, as well as the total amount invested in these deals and the growth of these companies. The other main role also that is actually a practice being implemented in different countries, like the British Business Bank, the Korean, Singaporean, Malaysian, and Canada, and many countries, where the government actually stimulate venture investment. This is the riskiest asset class. This is the illiquid asset, an illiquid asset class that usually investors will shy from being, though the appetite now after a couple of transactions, especially after the Kareem Uber deal, there is an appetite moving. Now the government here should be also backing these investors, not competing with these investors. And this is where the fund of funds exercise, so either Jeddah, the PIF program, or our program, even with the direct co-investment, it should be alongside angel investors as well as institutional investors. So we don't compete with venture investors. We back these investors so they can evolve and add value to the founders and entrepreneurs, and back these startups to grow and scale.
And to dig a little bit more into SVC specifically, I mean, you've got two programs, if I'm correct. You've got the matching program for investments directly for startups, and then you have investments in the actual funds themselves. I mean, what's the behavior you're trying to drive with the matching program? And if you can just give a bit of detail for any of the entrepreneurs that are listening, how can they benefit from the matching program? And do you have any criteria by which you need to be eligible for it? And if there's any investors on the call, what kind of investors are you looking to target, and how can they benefit from that?
So our core program or main program, which is 90% of the fund actually focusing on, is the fund of funds program. So we want to stimulate private-led fund managers to set up these funds, and then we anchor these funds with an allocation that goes up to 65%. So in that program, we're looking for professional fund managers that have a track record and experience in investing and backing startups, so they can set up new funds that we can anchor. And so the availability of capital and fundraising, well, fulfilling the gap of fundraising for the fund managers that will add value to startups and back these startups. And that's the core program. And then we have the co-investment program, which is a deal by deal. We have two sub-programs out of this program. The first one is the angel co-investment program. So mainly we want to stimulate more professional angels that will add value to these startups, sitting on their board, backing them, helping them to access the market, to scale, to grow, or to fix their operation for scalability and growth. And this is where we want to stimulate more professional angel investors and also more professional angel groups to fulfill the gap mainly on the seed and pre-seed stage, which is mainly and globally it's backed by investors, angel investors. The other program is actually the sub-program also, the co-investment is focusing to co-invest with institutional investors, including family offices, corporates, as well as VCs on a deal by deal. And we come only if there is a gap that need to be fulfilled. We are in this program part of the private sector stimulus program, and we are a gap filler. Whereas whenever there is a gap, we do the direct, and if there is no gap and the deal is a hot deal and is fulfilled by professional angels or VCs, we withdraw from that deal because we want them to lead these direct investment exercises. So the direct program is mainly a gap filler program.
Look, I encourage everybody on the call, if there's any questions that you would like to share, please feel free to share. I'm going to jump into two questions that I just received on the group chat that I thought were quite interesting. One of them is asking, would you invest in support for a startup that has a signed pilot outside of Saudi Arabia?
So because this is the funding we're getting is through the Ministry of Finance. Mainly our direct program is actually to invest in Saudi-based companies, or if there's a company reaching an MVP level and they want to relocate their main operation or headquarters in Saudi Arabia, would be happy to explore that. They see that this is their biggest market and they want to set up their operation here. We're willing to look at these deals, and we have a couple of deals that has been invested in that direction. Though on the other side, all of the funds that we invest in, they have room to invest elsewhere. So based on our contribution in a fund, they have to invest in Saudi-based company. The rest of the funds that we invest in, they have room to invest elsewhere, regionally or globally.
Okay. And this is an interesting question by a gentleman called Syed. Almost all countries in the Middle East are vying to be a main hub for startups. While Saudi is the largest economy, there are always established hubs like the UAE and other places. What is the main reason you think international startups should pick Saudi over others? And do you believe that they should pick?
Sure. I think it depends on the sector or the industry and the preference of the potential expansion for the growth for these companies. Some of these companies actually would consider Saudi Arabia as their biggest market. So this is where the reasoning says in that exercise is that they should be in Saudi Arabia. Though we need to work more on the challenges why they are not located in Saudi Arabia. From my perspective, I see this competition across different countries in the GCC or the MENA region. I think this is healthy, where all the government entities are now trying to compete in terms of providing incentives and support for venture deals and startups. Usually, we weren't having this. Especially for me, I've been engaged in building the ecosystem for the last 10 years. I can really see the progress has been evolved in many countries. We'll continue seeing these competition across countries, but this is a healthy competition. So we make sure that we have the only thing that I think will limit this growth of these companies if they don't think that these startups has to grow regionally and globally. And that's the mindset you mentioned at the beginning of the entrepreneur. So the nature of is to think to expand and grow globally.
I mean, I have a view on this. It's interesting because when people ask me this question, I say Kareem was Kareem because they were able to operate in 18 countries. And I think my view personally, having been to many of the different geographies and hubs, is that we could say that the hub is where they're headquartered, but ultimately good founders will go where there's revenue. Good founders will go where there's talent. If you're able to provide talent and you're able to provide revenue, they're likely to set up in that location. Otherwise, they should look to be in all the different locations, and the focus should be on how to bring down the barriers of entry for those startups into all these jurisdictions. Because if this dream of unicorns is to develop, then the companies need to be able to access all of these markets. And it's not really that important where the HQ is. The HQ will end up being, like I said, where the most revenue is and where the best talent is. But I can understand the need to cultivate the different hubs to make them identifiable from that perspective. On the subject of, sorry, go ahead.
Just one more thing to add, actually. So this is a given parameter for these companies as well, investors, that the GCC as well as the MENA region at large, we all have the markets are not as big as is needed for their potential exponential growth. So definitely that is as a parameter given, and this is where cross countries and really trying to remove these barriers will give them room to expand and grow and scale.
Yep, no, I agree. There is an obsession with unicorns in the region. I believe it's just because of it's a sign of success and achievement. A couple of things. What are the things that we need to see happen in Saudi Arabia to have a Saudi-based unicorn? And how long do you think it will take for us to be able to see a unicorn? And do you even believe it's important that that's the benchmark, or should the benchmark be to see some very good, successful $100-200 million exits? So I guess there's three questions there. Starting with the last one, do you think it's important to obsess about the unicorn in the short term, or is it more important to see some successful exits? And the second is, what are the things that we need to start seeing happening to be able to see that?
Sure. I think definitely this is a global benchmark, whether we like it or not. The issue here is actually what would be our next milestones to be achievable. Before we go into the unicorns, did we reach actually the critical mass of later stage investments, pre-exit investments to reach to the exits? And so all these initiatives has been in the ground in Saudi Arabia only for the last 2 to 3 years, I would say, since the inception of, started with the Vision 2030 and how this is a core to diversify the economy. And then SMA Authority evolved as the SAGA evolved in that exercise, and many other government agencies and trying to support this exercise. So the nature of venture deals, they don't actually grow and scale over few months. They will need a couple of years. And we all saw how it took Kareem 7 years. We know that there has an accelerated rate, accelerated path for few deals, but these are outliers. So you can't rely mainly on these deals. But I would say we need to keep a balance between also really putting the next milestones, working on these milestones, and what are these barriers, and trying to reduce these barriers to make sure that they're reaching later stage investment rounds before we jump into unicorns. Though with the pace that we have, I think we have like, I don't want to put dates, but at least we need 2 to 3 years minimum actually to might hit one unicorn, and that's at the accelerated rate actually.
Right.
As well. I think that's the minimum. We need a few years to reach that. And then make sure that we have stage exits as well also to happen. Luckily, the last year actually, and this year, we're seeing actually a couple of exits, and that's very positive for the investors. But I think we need to have the right critical mass to make sure that this stream pipeline is actually evolving, and from that volume, you will get the outliers.
I think there's a question here from Naveen who says, going through the report, the chart on funding by stage, and notable that the Series B investments are minimal. Is that a result of investors shunning such investments, or have companies not been graduating to this stage? Is SVC looking to address this? I mean, from my perspective, we did the same chart for the MENA region, and I think we did a piece of analysis 2 years ago. It takes 8 years to exit. It takes about 5 years to get to Series A and Series B. We can go back to the chart that I put at the beginning, and we saw that there's really only been an acceleration in the last 2 years about the number of investments and the amount of investments. And not only that, if you look at the top 5 funding, the top round was about 8.5 million. I think it takes time for these things to get to a point of fruition where you can actually see Series B and Series C funding. But I guess the question to you, Dr. Nabeel, is SVC looking to address a particular stage gap, or are they focused across all different stages of startup growth?
So what's happening actually, it's a natural progression in the investment scene. And I think also, yes, definitely, we always have this overlooking the different stages and where are these gaps. And we are, as a gap filler, we've always, so some of the funds, we approved to invest in 15 funds to invest in. So some of them approved does not mean we committed. We committed to 6 funds so far. Some of the 4 of them will be focusing on the seed Series A. But we have also 2 of them actually now focusing on Series B and beyond. But so before that, it wasn't making sense for fund managers and investors to have later stage VC funds, because there wasn't much of quality investable deals that already reached that place. But now, because of this progression that happened, now we're seeing more potential deals. That's why we have now approved to invest in 3 funds that is focusing on later stage. So that's why I'm expecting that this year we will see also more increase in Series B and C beyond seed and Series A, and that's gonna evolve as the pipeline enhances and evolves. So that's why we are actually trying to balance the availability of risk capital in these different funds, so they make sure that they are fulfilling these gaps.
Perfect. I don't want to take up too much more of your time, but just a couple of interesting questions that came through. Joe Ntwazi, I believe, asked a question. He says, and this is off a piece of research we did with 500 startups, where we looked at what were the biggest challenges of founders in the region, and talent was highlighted as the highest or first or second challenge that all startups are facing. And he's pointing to the fact that there was a low amount of talent acquisition in the last year. For you, when you see the state in Saudi, what are the biggest challenges that you see with hiring? And do you have recommendations of how some startups can overcome these challenges with regards to talent acquisition, either locally or internationally?
So I think there has been part of the social, I would say, growth and reformation happening in Saudi Arabia. We're seeing more actually Saudi male and female entrepreneurs involving into the startup scene. So this is actually, we're seeing either you will have the availability of risk capital to invest in these startups backed by these founders or founded by these founders, or you have the entrepreneurs and the talents. And I think usually it's a balance of both sides. But I think also the result of this, the the great scholarship program in Saudi Arabia, where we are seeing more Saudis coming and going abroad for studying and coming back with a different actually mindset, skill set, and mindset. But also that's for the transformation in locals and Saudis. So it wasn't appealing to be an entrepreneur. You usually go to the government or big corporates. So this is dramatically changing, I would say, in Saudi Arabia. Meanwhile, also, we are seeing that now the ease of having the visa for the startups and the startups backed by VCs and investors that was released through the SAGIA program led by Dr. Mazen Zaidi and others. And I think these are complementing the availability of talents. Definitely, there is an issue on the many also great projects are evolving in Saudi Arabia, and there is now a fight on grabbing these talents. And definitely, that's going to be a challenge also facing startups. But I think also with some of the instruments used to attract those startups, like the ESOP or whatever, is now being evolved. That wasn't an instrument being implemented well in these Saudi startups. But I'm seeing that this is evolving also. So some incentives for employees to have shares in these companies, they will be attracted to join these startups also.
Thank you. I'm going to leave it with two more questions. They're quite interesting that I've seen. Ian Norville asks, what are the one or two primary mistakes that international startups make when launching their Saudi presence? And what should they be doing instead? That's really interesting for me. I mean, as people are looking to go to Saudi, what have you seen as some of the mistakes that they're doing? And what are some of the recommendations you have for them when they're trying to enter Saudi Arabia?
So I think one of the main challenges actually is the engagement with local talents in terms of the management of I would say the expansion exercise or entity here. So the more they engage their local talents and being part of their expansion to set the Saudi market or accessing the Saudi market is very critical to navigate through the market because definitely each market has its own I would say parameters. So understanding these parameters and how to access and scale in this in Saudi Arabia, they need to be engaged with potential local talents that will help them to really scale and expand. And I think this is one of the critical. And also, I think also with the key supporters of that exercise, especially SAGIA, for instance, and how they can benefit from their services and support, because this is a mandate and a KPI on them to attract more startups to be soft landing in Saudi Arabia and expanding in Saudi Arabia.
You know, I guess it's also an understanding of the Saudi mindset. I mean, it's different, and being able to hire talent locally that can understand that mindset and the way that they can engage, whether it's B2B or B2 government or B2C, that just acknowledging that they may be somewhat different to other jurisdictions, but putting yourselves in the shoe of the customer is very important when you're trying to engage with them. But being able to hire the right talent locally can support you with that. And I think SAGIA does a great job of being able to act as a launch pad for companies that are looking to enter into the market and support them in that journey. The final question here from Syed is, in terms of exits, listing of tech startups are either in the US or Hong Kong, Shanghai is what he's stating. Is the Saudi board working on a way to list more tech companies locally? Do you even believe that IPOs in the secondary market or the listing market is a route for startups, or is the market just too immature in its current state for that kind of discussion, and that it's actually very complicated to get into, and that it's more about developing more natural M&A activities for exits? What's your view on this?
Sure. I think, I mean, even in, according to literature, actually, even in the Silicon Valley, so 80% will go into IPO. And that's the nature of
80%.
80%, sorry, 20%. So 80% will go into sales or M&A or any exit options. Although I agree that still that we have the secondary market, and we have and really CMA has been aggressively updating their regulations to really ease that. But I think it's a mindset and within also the startups and corporates and or whoever wants to help in backing these startups, and as well as to get them into the channel of being IPO. So I think from my perspective, exits is the keyword, not what kind of exit. Maybe that would happen at the later stage when the investors, they see the value of these exits and returns out of these exits. And then definitely you want to develop the capital market parallel to what's happening in Saudi Arabia. So I think also specifically the last 6 months, there has been aggressive workshops through the Saudi Venture Capital Association in partnership with CMA and the Ministry of MCI, as well as the other players in the ecosystem, and actually capturing the facilitation of an exit. Actually, next week we are having a workshop on the challenges facing exits at large. And specifically IPO exits. But yes, I think we should encourage more exit, despite it's IPO or not. But definitely, we would see some of these being IPO, and the more actually the ecosystem and the environment evolves, definitely we'll have more IPO exits at a later stage.
Dr. Nabeel, I'm going to end it there, and thank you very much for your time. As always, it's extremely enjoyable to speak to you, learn your insights. I think that you're a pioneer leading a lot of the activity that's taking place in Saudi Arabia, and we're very fortunate to be working with you. I encourage everybody to look at Saudi Arabia as an opportunity. There is more efforts and policies and initiatives now than there ever has been. SAGIA has done a huge amount of work to try and make it easier for international startups to set up. Monshat has done a huge amount of work to make it easier to cluster and bring initiatives for startups setting up in Saudi to be inspired. There are many events. Just now there was the BBAN event which took place, where people are able, in my opinion, the most important part of any ecosystem is intellectual capital transfer and people to exchange ideas and ways that even challenges and opportunities that they can develop. And I would like to thank you for sharing your insights today. So thank you for joining us, and we hope to see you next week in STEP, if not sometime soon in Dubai, or otherwise I'll be in Saudi Arabia soon to see you as well.
Thank you, Philip, and thank you for everybody who joined us on this webinar.
Thank you. So I encourage any of you who missed out on the Saudi Venture Capital report that we brought out, the snapshot, we'll send you a reminder with the link to download, and that will be something that we're going to bring out midway this year as an update on 2020 and at end of year to really give transparency on what's happening in this space. And we look forward to you joining us on our next webinar, which will be back on a community focus, where we'll be demystifying legal terms for fundraising. That will be done with a colleague of mine, Noor, who will be interviewing a lawyer from the Clara startup on what are the biggest things to look out for as you begin to fundraise. So thank you very much. And if you have any feedback, please share it with us. If you have any ideas of future webinars that you would like us to work on, and any guests that you would like us to invite, please don't hesitate to let us know. And finally, I would like to thank you again, Dr. Nabeel, and hope to see you soon. Thank you.
Thank you. Bye.